All right, hey there, traders. Sam here. Saturday. Oh, it's about 3 o'clock for me here in Austin. I thought I'd just do a little follow-up video here. Wouldn't be surprised if some of you in the Discord in particular were curious how the very simple little algo that I put together. When did I do that? Here on Thursday, how it fared on Friday with that pretty dramatic sell-off across pretty much everything, with the exception of gold. So I'm right back to the exact same algo that I was using. This is MNQ with a 34 range. Now let's bring over the details here. Just as I left it with one addition. So again, we're just using, it's drop dead simple. Close is greater than the high of the previous bar. Volume is greater than or equal to the volume of the previous bar. CCI is above the zero line. The OBV here, I'm using an OBV and a moving average of the OBV, both set to 5, that the OBV is above the moving average. And then we have a close greater than or less than the Keltner channel, right? We see here, again, drop dead simple. Well, when I brought it up here to look at how it responded yesterday, it was not surprising to some degree. The one weakness of this, if I can use that word, of this algo was that it was trading so frequently, right? So commission costs were very high, and the potential for it to get for losses to get to be too large for your comfort level, if I say it that way, was due to the number of trades here. Now, it's still, I modified it here, it's still, average number of trades a day is 13. I think that's down from 16 or 17. I mean, it's a lot of trades in a day. This is a 34 range in the MNQ, so you're going to see a lot of trades because it's not uncommon, as you might suspect, for the price action to get outside of one ATR. This is a 21 period. For the Keltner channel to get outside of one ATR, right? It's happening very, very frequently. So many trades was the one drawback to this. And the only addition that I made here was to add into it, and I just thought I would use this to show you how to do this. I'm going to go to the type here. I'm going to go to trade, and then I've got a number of choices down here. Number of consecutive winners or losers. I've got a number of things that I can do to tweak here. But I found that by reducing the number of consecutive losers made a pretty dramatic difference. So I added that and I put that number to 5, right? So 5 consecutive losers, stop trading. Well, look at this difference here. So this is oh, let's see, I'll put this over here. Let me take that out and then show you what it looked like with that big sell-off yesterday. You see a pretty dramatic sell-off. I mean, from its high up here at 26, that's more drawdown than you'd want to experience. And you see here the max drawdown increased here to 830. Net profit is down from, I think, 25 or 26 when I recorded this on Thursday. So you might look at that and say, okay, well, that's more than I'm comfortable with, particularly in a day where there was so much opportunity. Now, you will recall this algo that the ATM stops trading at 2 o'clock. So, much of that sell-off was in the afternoon, so it would have missed some of that anyway. But just by making that little switch here, if I turn this back on, we look at this drawdown here on Friday, and then I add this to stop trading when consecutive losers is less than or equal to 5. Boy, still some drawdown here, but again, I would propose that very few of you would be disappointed with that result. And again, I have not re-optimized it. I've just added an additional condition. So now we go back to max drawdown being only 435. I said in the earlier video, on the assumption that because it's the most popular, the majority of you are trading a 50K prop account with a drawdown of 2,500. That max drawdown number is the one you want to pay attention to. So you've got a nice cushion here with 467 as your max drawdown, and it looks like that all happened on Friday. So number of trades now down to 13. Still a very nice result. This is single lots. Remember, one lots on the micros over the last 21 days. So you end up with, in this particular case, now we have 15 trading days because it's including the weekend. So 15. So I have 2 weeks of trading. I mean, just a gorgeous looking equity curve, despite a few little drops, a little pullbacks, right, which you would expect in any algo or any trading system. Pretty nice. Now, I thought what might be worth exploring here, just trying to keep this short, so that's a nice little addition here. And I think the power is, what I hope you appreciate here, is how quickly you get that feedback. And so to do a number of tests here quickly, once I've got a good base to work with here, is incredibly power. There's nothing else that does that, right? That gives me that immediate feedback here just by clicking on off or adding a condition, removing a condition, tweaking, re-optimizing. It's so much horsepower here in terms of getting a good equity curve. This is, again, as I said, this has not been re-optimized. It's left to the last time I optimized it, which I think was Thursday. Still on the Sharpe ratio, same conditions, right? But a very, very nice result. So let me close that here. And then just out of curiosity, I thought I'd see how that again, this very simple algo, how it looked on the MES, right? So I brought up the MES here, and I started fussing with it, and I could not get a good result with range bars. I didn't get anything that was acceptable, the conditions that I would look for. But then I went to something that I will often test, which is a 2000 tick. That's one of my preferred chart types here for the ES or MES. And I found with a 2000 tick, I had very, very, very nice results. So if I bring up the algo again, it's the exact same algo. I'll go over to logic here so you can see it. Same thing, exact same algo. The only difference between the MES and the MNQ results are that I changed from a range bar, 34 range on the MNQ, to a 2000 tick here. Exact same parameters, exactly the same. Now I did optimize here on daily net profit. You'll recall from the prior video, as I said, the three that I look at most commonly are net profit, daily net profit, and the Sharpe ratio. So here on daily net profit, I was very pleased with the results. Same conditions here. No optimization of anything other than the stop loss and the ATM. And now, so on this one, I did use a stop loss. Right? It's very easy to run an optimization, try it with or without. You'll recall on this in the logic here, I'm using a potential filter in the CCI getting above 200 or below minus 200. You see that if you load it up on your chart, it's very, very consistent. If I move this, we get above 200, below 200, above 200. Though you'll very, very often see the market pivot. Which why I mean it's just a simple eyeballing of that as to why I would use that number. So that's potentially there for an exit should the stop not take it out first. So if I go back here, again, same thing, 5 consecutive losers in a row, stop trading. Single lot micros over 21 days. Again, so same conditions here. I've got essentially 2 weeks of trading. Boy, what a nice looking equity curve. And this one on Friday did nothing but make money. Right? You can see the trades from Friday. Now the ATM is slightly different here. If I go to the conditions, and just as I said before, I went to reports, looked at it, said, okay, do I want to cut something out? Well, middle of the day was not good here. 10 was not free. I mean, we often have reports, data comes out at 10 o'clock, so it's not surprising that there can be drawdown there. Is this the best spread I've ever seen? No, but this it's not uncommon here from Europe's close to 1 o'clock to see the market be quiet. Now Friday's an anomaly, right? And then in early afternoon, not so good, but so acceptable. I would be comfortable running that. Monte Carlo here, just like before, right? You want to see something tight. It's a little wider. So maybe this, you might look at this and say, the one thing I will note here is all of the Monte Carlo here, because this is randomly taking the trades in random order, that most of it is all higher. It's better results rather than less results. So the fact that they're all above the white line here, which is the actual results, somewhat encouraging. Risk of ruin still all very negative. So I'm not, again, I'm not promoting this particular algo. That's not the point here. I'm promoting how easily you can work with something, get a foundational idea like something like this, which is again just about as simple as they can be, with just a few indicators, some volume, some momentum. Really, I'm leaning on volume twice here. And then again, statistically, getting outside of one ATR on a 21 period, okay, that's a very reasonable starting point. What's the result? Again, I'm going to assume not many of you would be disappointed with that result. What's the number that matters? Max drawdown, 308 to make $3,000. That's good math. Also here, average win to average loser is better here on the MES, 165 to 172. I also like biggest winner at 702 and biggest loser at 277, right? Those are numbers I can work with. The win ratio here is 62%, particularly high. Profit factor 3.03. These are excellent numbers. Now, again, I'm not saying that this is, I'm not trying to promote this particular algorithm. That's not the point. I'm trying to promote to you the unbelievable power you have here to do testing with Algo Studio Pro, right? To create something like this and then run it. Now, my suggestion would be before you go live, run it in. It's not a bad idea to run it in sim for a week. Just see how close the results you're getting match the backtest results, right? Remember, backtest results are no guarantee of future results, right? So you want to see how it's doing in a live market before even you take it to a prop account. Now, some of you, are going to create something and go right into a prop account. Well, okay, right? Prop accounts are, if you're with Apex, right? I mean, they essentially damn near give them away. But if you're looking for something with an end of day drawdown, which is always going to be preferable for any, they're always preferable because you're not getting tied to the intraday trailing drawdown that you have with Apex, which is why Apex accounts are so cheap, right? Because likely you're going to buy a lot of them. You go with an end of day drawdown, you're going to pay 3, 4, 5 times as much, but you're going to have an end of day drawdown. So you're not worried about what's happening intraday. Should a trade get way up and then give it back, and then your trailing drawdown is going to bite you in the ass. So this is a different way to approach that, right? So I would encourage, if you're working with prop accounts, look for end of day drawdown. There's a lot of them out there now. I'll post one in our Discord here for those of you, because I've had a few asking about that. So you're going to pay more for it, but you're going to have much better potential for success. Very, very powerful, right? So if we look at all of this, again, this is really, really pretty straightforward. This is a simpler stop loss here with an ATR 7 times, with a multiplier of 7 on the ATR. So you can understand why here often you're going to see that the CCI will take it out before it gets to the stop, right? We see here stops way up here. I mean, these are winners at the end of the day. Here's a loser going short here, right? Some momentum-based entry here. Coming out of the lunch hour, okay, well, what takes it out? Right, it's not the stop, it's the CCI, right? So we get a nice winner to go right down to the close of the day. Right here's 4 o'clock, right? So nice push here, so you can see this one at the end of the day or on Friday, did quite well. So there are a few things to think about here. I thought that would just be a worthwhile follow-up just to see how they do, right, when we have extreme volatility as we did on Friday. Okay, a few things to think about, and of course this algo, as well as I'll link our suggestion for a prop firm to give you a good end of day.